How can you start a business that doesn't fail? That's $1 million question. Now, a quick glance at the U.S. Bureau of Labor Statistics, yes, that's a mouthful, presents actually a sobering picture. 20% of all U.S. small businesses actually fail within the first year of operation. If you fast forward this to 5 years, that increases to a staggering 50%. And then by the 10-year mark, a whopping 2/3 of all businesses have closed their doors. But is there a way to shift these odds into your favor? Can we rely on the data to determine the different types of businesses with the best chances of success? Thankfully, the answer is yes. And research has actually identified 6 businesses with the lowest failure rates, all backed by concrete data. Now, the first business that you start or the first deal that you do actually plays a critical role in determining your entrepreneurial journey. The most important decision that you make is going to be that first deal that you do or the first business that you start. And guess what? If that first one fails, then the likelihood of you actually taking that risk again significantly goes down. And this is actually called something called your recency bias. This is when people are asked to recall in any order the items on a list. And typically those at the end of the list are more likely to be recalled versus the others. So what does this mean? Well, this means that if your recency bias is winning, then you're more likely to go out to win again, to take on more risk. But if it's losing or failure, then you're less likely to continue to take risks. Now, let's get into the data to see which of these businesses has the lowest risk of failure. And before we do so, if you're new here, I'm Dr. Jeff Anzalone, a periodontist to get you out of the rat race. Do me a favor, download the free passive income guide with the link below this video. Now, the unsung hero of the small business world actually boasts an impressive 94.8% success rate, and that is the laundromat. Now, this could actually be attributed to the fact that people always need clean clothes, right? This makes this a very recession-proof business. Now, laundromats require a basic understanding of washing machines and dryers and how to maintain them, making them a great option for the new business owner. They don't demand a lot of money to start or purchase either. They have the added benefit of actually being a semi-passive business, needing few employees to run it. Your main investment is actually in the machines itself, which actually become your employees. And for those that want to be a little more involved, then your job can be simply going by and collecting the quarters. Number two, and this is one of my personal favorite areas to invest in, is rental property. Andrew Carnegie famously said, 90% of all millionaires become so through owning real estate. Now, this field has actually produced more wealth than almost all other industries combined, and not surprisingly has an impressive success rate of just over 85%. But what makes real estate so attractive, and why does it have such a low failure rate? First, it's really a straightforward business with tangible assets. You own a property, and its market value is usually stable. The real estate market's efficiency means there's not much room for these sudden increases or drops in your property value. Another thing that I like about it is you can actually ride by a property that you own or that you're a part owner in and actually see it. You can actually stop, put your hands on it. And I don't know about you, but it's kind of hard to do that with a stock or mutual fund, right? Now, real estate is a business that actually generates consistent monthly cash flow, and this is through rental income. You have a clear financial structure really from the get-go. Your expenses are defined by your mortgage and the interest that you have to pay, and your income is from the rent that your tenants pay you. And the difference between the two is your profit. And one of the great things about real estate is the potential for it to actually appreciate. And on average, in the US, property values rise roughly about 4% a year. Also, let's not forget the leverage. This is where you can actually buy properties using other people's money, which can significantly boost your potential for higher returns. Then my favorite part of all in real estate are the fantastic tax benefits that it gives you. You have the ability to execute 1031 exchanges, and this allows you to defer capital gains. You also have the advantages of depreciation, accelerated depreciation, bonus depreciation, which allows you to write off certain expenses on your taxes. Now, if you're a real estate professional or you use the short-term rental loophole, you can actually use the depreciation, the losses that you get from the real estate from getting a cost segregation study to offset your W-2 and 1099 income. I have several videos on this. You can go through the library and check them out. Now, investing in real estate also offers a degree of passivity. You can hire a property manager to handle the day-to-day operation. If you're like me, a busy professional lacking time to deal with tenants, there's actually investments geared just for you that I love called real estate syndications. These actually allow you to invest your capital outside of the stock market in cash flowing assets that you can use to begin to replace your expenses to get to the point where, guess what? Work is optional. All right, let's move on to number 3, and that is self-storage facilities. If you're considering a business that involves real estate, but you don't really want to manage the typical issues associated with, let's say, multifamily properties like tenants and maintenance, then a self-storage facility could be your ideal match. Since 2008, these facilities have emerged as one of the top performing asset classes in all of real estate. And according to studies, these resilient businesses boast a very high success rate of about 92%. Now, one thing to be mindful of, though, is that there are a growing number of these facilities. This increase may impact the success rate, so it's really important to closely monitor the industry trends over the next coming months and years. Now, I personally know people like Nick Huber, uh, also known as the Sweaty Startup on Twitter, that has Bolt Storage, who actually I recently interviewed. I'll put the link below this video. And people like him are actually thriving in this industry. He's made millions by running these lucrative self-storage businesses remote, as these are actually virtually unmanned facilities. So the ability to operate these businesses remotely has really become the standard practice, thanks largely to technological advancements like keyless entry systems, security, automated billing, contract systems, and all of this allows customers to access their units without you having to physically be there. Now, this automation has made it feasible to run these businesses with less hands-on involvement. So, with the convenience of advanced technology and the potential for hands-off management, self-storage businesses offer a unique opportunity in the real estate space, which leads us to number 4, and that is something that you don't really hear a lot about: the transportation business. One of the industries that has undergone some of the most significant changes in the last decade is the transportation business. Why? Well, thanks to the rise of e-commerce, the gig economy, and various online platforms, the need to deliver goods directly to a customer's doorstep has skyrocketed. Just look at what the COVID era did with online shopping. So the idea of actually transporting goods or people from one location to another in exchange for a fee is really the basic principle of the transportation business. Now, this business ranges from comprehensive long haul trucking operations to just simple weekend gigs driving for Uber or Uber Eats, something like that, along with several options in between. Research shows that these businesses, they boast a respectable success rate of almost 77%. Now, it's important to note that there's a considerable difference between delivering food for Uber versus long haul trucking. Now, results may vary, but on average, these businesses tend to have a very high success rate, largely due to the limited factors to manage. Scaling, though, it might be challenging, but if your goal is to convert a job into a business, then transportation can be an interesting and relatively low risk venture. All you need to do is go buy a truck, new or used, and then you maintain your investment. And your main investment would be simply your time to start with. Either you drive the route yourself or you hire somebody else. And there's also limited upfront expenses associated with running these types of businesses as well, which leads us to number 5. Number 5 is something that you probably see on a daily basis, and that is vending machines. Now, you certainly don't need much money. It's a very low cost of entry, so you don't need much money for these businesses to get started. With only just a few $1,000s up front, you can either buy a new or used vending machine to get going. Now, the first step is to find a location that has high foot traffic, and then you negotiate the placement of your machine either as a service or for a rental fee. And that's it. You just negotiate your fee. Once you get it, you stock it within your inventory, then you're well on your way. Now, this is a fantastic starter business, especially if you're looking to earn your first 20, 30, maybe even up to $100,000. If that sounds something like that would interest you, this could be a good venture for you. Now, this business actually provides valuable learning opportunities, including needing to know how to understand P&L or profit and loss statements, how to run logistics, how to price items, profit margins, and even managing employees if you choose to not run it solo. Think about it. This would be a great job for a teenager or college student because, when I look back at my lawn service business when I was in high school and college, it taught me a lot of things. It taught me how, I didn't know this at the time, but now that I look back at it, it taught me how to market the business. It taught me how to go to sell, how to go door to door. Then as I started mowing yards, it taught me how to track profitability. I had to learn how to do billing. I had to learn how to deal with customers, and really everything that comes with running a business. Now, I know that I wasn't going to do that forever, but just learning those things from the get-go. Okay. Now, with vending machines, you can actually start on a smaller scale, which actually helps you to reduce the risk. Then, once you get comfortable running it, maybe one or two machines, then you can start to gradually expand. And this is exactly how I approach my lawn service. Same way. Started mowing a few yards, started to expand, started to get more equipment, it cash flowed, that sort of thing. Now, the actual success rate for a vending machine business varies from 80 to 90%. Now, given the low failure rate, the affordable startup costs, and straightforward operations, I really recommend this start a business for those that are willing to hustle. And last but not least is something called senior care centers. Now, investing in these facilities has really caught the eye of a lot of investors lately, mainly because of their low failure rate. Actually, when you think about it, it makes sense for a few reasons. First off, these facilities, they often benefit from government, city, or state assistance. They're providing money, they're providing a financial cushion to operate them. Second, take a look at the demographics these days in America. What does it show you? As a whole, what's happening to the population? The population in America is getting older. My parents are in their 70s, and several of my friends' parents, they're actually in their 80s. So as the population continues to get older, then guess what? There's going to be an increased need for increasing levels of care for seniors. Now, there's a dentist in my area that actually owns several of those assisted living facilities and a few nursing homes as well. These are worth millions of dollars. Now, I get that it's not feasible to invest in a very expensive property worth millions of dollars right off the bat. However, there's actually a way to get into actually smaller scale alternatives. So for instance, you can go rent a house and you can obtain the appropriate zoning for a senior care facility, or you can buy a house instead and get the necessary permits for an assisted living residence. Now, remember the concept that I've actually spoken about time and time again on this channel from one of my favorite books, Who Not How. Okay. Don't try to figure out how to do all this stuff. Go out, find a who, find your who or a mentor, an expert in this field, or really any field that you're trying to get into that you don't know much about. So, senior care centers is a field that actually demands particular oversight, certifications, and zoning. So, when you go find your who that can mentor you, he or she can help navigate through all this for you. Also, if you decide to buy a house and then convert it, and it doesn't take, so if you decide to buy a house and convert it, then guess what? It's not going to take that millions and millions of dollars previously assumed would be required to get into the space. So there you have it. The 6 business types with the least probability of failing according to the available data. Now, I mentioned during our discussion with business number 2, rental property, on how I like to passively invest in real estate. If you want to learn more about how I do it, check out this video.